Hello there. Welcome to Financial Accounting and 5. Today we want to look at a question paper of November 2022. This question paper that we have, and on that question paper, we are going to look at question 3, which is on branch accounts. So we can go there and see what we have in terms of question 3. On that question paper, this is our question 3. And the question reads, JD Stores operates a number of independent branches around Durban. The owner, Mr. JD, sells inventory to branches at cost, and inventory is recorded according to periodic method. The information below is for the Impangeni branch. So we've got information for the Impangeni branch that we are given here. We've got the column for details, column for amounts. So this is our question, and our question goes down. We now have the required part where the question is reading, draw up and balance the following accounts in the books of the Impangeni branch for the year ended 30 May 2020. And then on the first part, we've got the head office, second part, bank, third part, we've got inventory from head office. And then obviously, if you go to the next part, which we are having, or that question paper, that is now 3.4, it requires us to prepare the trading account. And then lastly, we've got in the books of Durban head office, show the Impangeni branch. So we also have to show the Impangeni branch at the end of it. So this is the question. So we are ending here on 3.5. So we go back and look at the first part. We have got the head office bank. So we are not just going to concentrate on one account. What we are going to do is we already have the accounts opened there. So what we are going to do, we are going to go through the details that we are given there in the list of balances, and then we post them to each and every account. So if you have got any transaction that is written there in the list of balances that is affecting two accounts, we are just going to post them at once. So we go at the beginning of the question. So we're going to start here, and we go each item by item, and we post everything. So here, this balance at 1 June 2019, that's where the period is starting. So it means these are our beginning balances. So it means in the debtors at the beginning of the year, we have got 53,000 that we have. And you would see that we do not have a debtors account there in the question in the required part. We are not going to open any debtors or trade receivable account. So we are not going to enter this one. We skip it. We go to inventory at the beginning of year, which is 38,000. So what it means, we've got inventory that we have there, which is 38,000. So this one we are going to adjust it. We will adjust it in the trading account as our opening inventory. Remember, it will go to the debit side as inventory, our opening inventory. So if you go down, you see that we've got a trading account that we have. So we can go to the trading account and put that one on the debit side of the trading account. So let's try to see what we have in terms of this one. We've got the trading account here. This is our trading account. So opening inventory, obviously, it comes on the debit side of the trading account. So we can straight away post it there. We have got opening inventory here on the debit side. Opening inventory. Well, opening inventory, the amount that we have is 38,000. So we have 38,000. Then we go again to see what's the next item that we have in the list of balances. So on the list of balances, the next item, we have bank. We are given a bank at the beginning of the year, and it's at 12,000, which is a credit balance in the bank account. So what does it mean? It means in the branch bank account, we have a credit balance at the beginning of the period. So we go to the credit side, and that's where we're going to put our balance BD as 12,000. So we can go there and try to see what we have on the bank account. We put that opening balance. We are here. This is our branch bank account of 3.2. So the balance is being indicated that is on the credit side. So we are going to the credit side, and that's where we're going to put our balance BD. And remember, it's 12,000. Then we go back again to the question to check the next item. So from balance of the bank, we have got the head office 36,000. We have got the head office 36,000, and we see that it's a what? It's a credit balance. So obviously, we are not going to the head office account and put our balance BD on the credit side. Remember, these are the opening balance, so they are the balance BDs. So we go there and check on the head office account, and we see what we have there. So we go there, and then our balance BD on the head office is on the credit. It's indicated there. Balance BD. We have got 36,000, so it's 36,000 here. Then we go back again. Then we are done with the opening balance. These are our balance BDs that we are done with. So we go to the next item. We've got furniture at cost, which is 160,000. Furniture at cost, which is 160,000. So this furniture, it's a non-current asset, it's a fixed asset. So we are not going to post it in any of these accounts that we are having. It doesn't fit in any of these accounts. We skip it. We go to accumulated depreciation furniture. This depreciation again, we know that we find these two items. We find them in the balance sheet. These ones we find them in the balance sheet or statement of financial position. Accumulated depreciation is adjusted again in the balance sheet as we subtract it from the cost to find the carrying value. So this is what we have. We can skip that and then go to inventory retained to head office. Inventory retained to head office. So this one is affecting the accounts that we are opening them, right? On inventory returned to head office, so the double entry that is there is that if it's being returned to head office, it means we are going to debit the head office. We debit the head office account, and then we are going to credit the branch account. Obviously, this inventory is coming from the branch to the head office, so we are crediting the branch account and debiting the head office. So the one which is receiving is going to be debited. The one which is giving the inventory is going to be credited. And also, we are supposed to post it again to the inventory from head office account. Remember, we have got an account that we have there with the required parts that we are supposed to know. Open inventory from head office. This one, we also post that amount of 16,700. This one to that account of inventory from head office. So basically, the entries that we are going to make, we are going to debit head office account, credit the impact gain branch account, and then we also credit the inventory from head office. We also credit the inventory from head office. So we have 16,700, so we can just go there and make those entries. So we have got the accounts affected. So we have got we have to debit the head office account here. So we are debiting, and the inventory is coming from the branch account. The inventory is coming from the branch account, so we can say inventory, and the amount that we have is 16,700. And we are also supposed to credit the inventory from head office, and we also credit the branch account. So inventory from head office account, we have it here. This is the inventory from head office account. Remember, we're crediting it, and we say head office 16,700. And also we are going to credit the branch account here. So we are crediting it here, and obviously the description there is that it is being returned to the branch. So sorry, it's being returned to the head office. It's being returned to the head office. And this is returned and the amount is 16,700. So this is what we have, and then we can go back to check on the next item that we have on the list. Right, we are here on the list now. We are from inventory 10 to 8 office. Now we're on cash sales. Cash sales, what's the double entry that we have on cash sales? So what is important for you is, first of all, you have to lay down in terms of which account is supposed to be debited, which one is supposed to be credited. Remember, we are applying double entry. Every debit entry should have a corresponding credit entry. So you don't debit and debit or credit and credit. On one transaction, you debit, and then the corresponding entry should be a credit on the other side. So this is what we have. So what cash sales, what happens is these are sales on cash basis. It means we are going to receive cash, so we are debiting our branch uh our branch our branch bank account. We debit our branch bank account, is the one that is receiving. We are receiving money, so we debit our branch bank account. And then obviously the account that is going to be credited is the sales account. But we do not have the sales account in this case. We do not have the sales account in this case. So the entry of the sales account, we are not going to be worried with it, because we do not have any sales account on the required part. So we are only going to the branch bank account and debit with 520,000 with this figure, 520,000. So we are going to the branch bank account. Branch bank account. Right, we can just check the branch bank account. Here we've got the branch bank account here. We are saying we are receiving money, which is 520,000. So we are just saying sales. Here we are saying sales, and we've got 520,000. 520,000. So this is what we have, and the corresponding entry, we are supposed to post it to the sales account, and we are saying we do not have a sales account on the credit part, so we are going to skip that. And we go back to check the next entry. Right, from cash sales, we've got credit sales, 235,000. So the double entry on credit sales is that it's supposed to debit the trade receivables account or the debtors account, and then we credit the sales account. But in this case, we do not have all the two accounts. The trade receivable account is not there on the third part, not the sales account, so we're going to skip that one again. So it's not going to affect our accounts. So we go to the next one. Inventory supplied to branch from head office. Inventory supplied to branch from head office, 200,000. So this is inventory that is coming from from the head office. So the head office is giving. So whenever the account that is giving should be credited, and the one that is receiving should be debited. So the head office is giving, we are crediting the head office account, and then we are debiting the branch account. As simple as that. So we go to the head office on the credit side and put that figure. Right, we are here. We go to the head office account. This is the head office that account that we have. So we go to the credit side. So we are saying it's inventory. Inventory to branch. This is inventory from head office. It is going to the branch. And the amount is 200,000. And the corresponding entry is that we go to the branch, and on the debit side, we put that 200,000 again. This one is the branch, and then we're saying on the debit side now, we are putting that one is 200,000. So now the description of that 200,000, we say inventory to branch again. We've got 200,000 that we have. Right, then this is done. Then we go to the next one. Right, on the next one, we are here. So the next one is this one, sales return to branch. Sales return to branch. we have got a sales return that we are having that is going to this branch. Let's try to see. So you'd see that this sales return to branch is going to this one is going to reduce the figure for sales. Remember, when we have sales returns, they reduce the figure for sales. So the figure for sales that we have got uh, cash sales and credit sales. Remember, total sales, we say cash sales plus credit sales, then we get our total sales. So this one plus this one, the total that we get, we subtract 9,060 to get the net sales figure. And this adjustment is going to be in the trading account. So we can just go there and put that one in the trading account. And sales is on the credit side of the trading account. So we go there, we add this one, then we subtract this one to get the net sales figure on the credit side of the trading account. So we are here. Let's go there and see. Right, so the trading account, we go there. We are saying on the credit side of the trading account, we are here. So we are going to put it here and say sales. Sales. Remember, on the cash sales, we have cash sales plus credit sales. We are saying 520,000 plus 235,000. And then you subtract the returns now, which is 9,060. And then when you do that, the answer that you get is 745,940. Right. This is what we have, and then we go on to check what we have next. Right. From inventories, we are now on water and electricity paid by branch, 14,300. Remember, this is an expense, and it's an expense that has to be charged in the income statement under operating expenses. It has to be charged under operating expenses, and then it's also being paid by branch. So it means the branch bank account is the one that is paying that amount of 14,000, 14,300. So we are going to the branch bank account on the credit side, and then we credit the branch bank account. So the double entry on that one is that we credit the branch bank account 14,300, and then we debit water and electricity account as an expense. But we do not have a water and electricity account as an expense there on the required part. So we are going to skip that one. We're just going to credit the branch bank account 14,300. So we go there and enter that one. Right, branch bank account, we see what we have. We are coming to the credit side there, and we are saying water and electricity. It is 14,300. So this is what we have, and then we go back to check the next one. Right, from that one, we are here, salaries paid by head office, 23,700. So these salaries, obviously, they are being paid to the branch. So we are crediting the head office. The head office is the one that is giving those salaries. We credit, then we debit the branch that is receiving that amount, 23,700. So we go to the branch, we go to the branch and credit the salary. Or to the head office, sorry, we are going to credit to the head office. Here we are saying branch salary. It's branch salary. Branch salary, and the amount that we have there is 23,700. And the corresponding entry is that we are debiting the branch account. So we go there again on the branch account. Go there and check what we have on the branch account. Right, we are debiting the branch account. It's 23,700 is salary. Right, so this is what we have. Then we go back to check the next one. Right, from salaries, we are now on collection of trade receivables. Collection of trade receivables. Remember, trade receivables are the ones that we sold goods to on credit. Now they are paying their amount owings. So it means we are receiving money. So we are going to debit the branch bank account. So the double entry there is that we are debiting the branch bank account and we credit the trade receivables account, but we do not have the trade receivables on the required part. So the crediting part, we are going to ignore it and then only concentrate on the debiting of the branch bank account there. So we go to the branch bank account and debit it with 120,000. Branch bank account. Right, so now we are here, we are saying on the debit side, we are debiting with trade receivables. And the amount is 120,000. So this is what we have. Then go and check what we have next. Right. This is what we have on collection of trade receivables. Then next one is credit loss written off 600. Credit loss written off 600. So what does it mean? These are the trade receivables that we sold goods to on credit. Now they can we are seeing that they cannot pay their amount dues, so we write them off. So they become bad debts. So they become bad debts. So this one, uh, this one is going to affect the income statement. Remember, the credit loss we put it under operating expenses, and we do not have that account here. And the the other the other corresponding entry is that it is going to be credited to the trade receivables account. And we do not have again the trade receivables account in this question on the required part. So we are not going to enter that one. We skip that one. So this one we are not going to be worried about it. We go to the next one. Settlement discount granted 11,000. Settlement discount granted, which is 11,000. Again, this one is not going to affect the accounts that we are having there. So we are going to skip it again. Then we go to cash purchases. Cash purchases 170,000. Cash purchases 170,000. And then we also have credit purchases. So these ones are going to be adjusted in the trading account. Remember, we are going to put them on the debit side of the trading account. We are going to put them on the debit side of the credit account. So to get the figure for total purchases, we add cash purchases plus credit purchases. So in this case, we are saying 170,000, we add 60,000 to get the total purchases. And then when we do that, we also have to subtract the returns. We also have got the returns here. So it's 170,000 plus 60,000, we get the total purchases. Then we subtract the returns, which we are having, which are 14,000. And then we get the net purchase figure that we put on the debit side of the trading account. So we go to the trading account. We go to the trading account. Right, on the trading account, we come here. Remember, we're saying on the debit side. So here we are saying on the debit side of the trading account, we're saying purchases. We are saying purchases, and then on that purchases, we are saying 170,000 plus 60,000. Plus 60,000 there. 60,000. Then we are going to subtract the returns, the purchase returns, which are 14,000. Then we get the net purchases figure that we are going to put here. So if you make a calculation correctly there, we're supposed to get 216,000. So here we've got 216,000. Right. So this is what we have there. And then we go then to check what we have next in the list of balance that we are given there. Right. So after this purchases part, yes, purchases part here, we go to cash payments to head office. Cash payments to head office. Uh, all the cash payments to head office. Remember, head office is the one which is receiving the money. So we are debiting the head office account. We are debiting the head office account, and then we are supposed to credit the branch bank account, because this money is coming from the branch bank account. So we are crediting the branch bank account, but also this amount is supposed also to be adjusted to the branch account, because remember it's coming from the bank account of the branch. So we also adjust it on the branch account of the Impangen branch account. So what we are saying is we are debiting branch account 210,000, we credit the branch bank account 210,000. Then we are also going to adjust it in the Impangen branch account. So that is coming from the branch, it is 200,000, 210,000. So we can go there and make that adjustment. So on the branch bank account, remember we are saying we are crediting it, and this money is being paid to the head office. So we are saying head office. We are saying head office there, and then we are having 210,000. So this is what we have, and then we go again to the head office. Since it's the one receiving the money, we are debiting there. We are debiting there. The money is coming from the branch bank. Branch bank, 110,000. And we also show in the branch that in the Impangen branch account that's where the money is coming from. So we go to the branch bank account. Sorry, to the branch account, Impangen branch account. Here we are here. Also show it here, and it's 210,000, 210,000, and it's going to the head office. So we can just say head office, 210,000. So this is what we have. Then we can go back to check what we have in terms of the next one. So we are here on 210. So now we are on furniture to branch by head office. Furniture to branch by head office, 10,500. So we are going to credit the head office because it's coming from the head office, and then the one that is receiving is the branch, Impangen branch, then we take the 10,500. So that's the double entry that we have there. So so we are here. We are saying we are crediting the head office with uh, it's branch furniture. It's branch furniture, and the branch furniture that we are having is 10,500. And we go to the branch account and debit. We go to the branch account and debit. It's furniture from head office. Right, this one, and then you can say furniture, 10,500. So this is what we have, and then obviously we can go back again to check the next one. Right, beneath that we have got cash received from head office, 125,000. So it's coming from head office, going to the branch, 125,000. So it's going to be received in the branch bank account, 125,000. And then if we debit in the branch bank account, we also indicate it in the branch Impangen branch account to say that it's the branch as a whole has received that money. So we are crediting head office 125 debit branch bank account and also debit the Impagen branch account. So we come here, crediting head office here with 125. So we are saying branch bank. Uh, 125,000, and then we go down there to check, enter into the debit side of the branch bank account, and this is head office, 125,000, and we are saying also indicated it in the branch bank account on the debit side again, here on the debit side again, and it's 125,000. So it's bank 125,000. So this is what we have. And then we can go back to check on the next one. Right. We are here, so we are going down. So we've got the last one, which is the branch inventory at the end, which is 43,000. Branch inventory at the end, which is our 43,000. And this is our closing inventory. This is our closing inventory. So we are supposed to show it in the trading account on the credit side. Remember, the opening inventory, we put it on the debit side of the trading account, so the closing goes on the opposite side, which is debit credit side of the trading account is 43,000. So we're going to put it there. So we are here. We are saying now our we are going to the credit credit side of the trading account. This is our trading account, and we are saying closing inventory. Closing inventory, which is 43,000. 43,000. So these are the entries that we have there in terms of the trading account, but also in the trading account, we also have the inventory. If you go back to the question, let's go back to the question and see what we have. Right. If you come to the question, you'd see that let's check the figures that we have. We've got inventory supplied to branch from head office. So this is the inventory that was there during the year, 200,000. And then again, during the year, we also had inventory, which was retained to head office 16,700. So what does it mean? We also have inventory that we have to add to the opening inventory, which is, if we say 200,000 of inventory supplied to branch from head office, 200,000, and then we've got that one that was retained 16,700. If you subtract the two, the net figure is supposed to go to the debit side of the trading account again, because it's inventory that has been added, which is during the year. So it's not opening, it's not closing, but it's inventory that we noticed during the year. So if you subtract the two, you're supposed to get 183,300. 183,300. So this one is going to be to the debit side of the trading account. So we can go there and adjust it there. We have we can just give a description that it's head office on the trading account. We are going to the trading account. So here we are here. We are saying we can just give a description that is head office. And we just summarize the working in brackets. We say it at 200,000 minus 16,700. Minus 16,700, and we got 183,300. So this is what we have in terms of trading account. So our trading account, we've entered everything that's supposed to be there. We can just close it. So remember, after closing this trading account, we are supposed to have a profit or a loss. We are supposed to post the balance that we are going to get. Whatever side it is, we post it to the profit and loss account. So if you add the total of the debit and total of the credit, you see that the total of the debit of the credit is the bigger side. So it's the one that's supposed to come on the in between the double lines. So here we are going to put our double lines, and we are saying the total of the credit is the greater one, so it comes on the in between double line. And if you add there, the total of the credit side is 788,940. And the total of the debit side is also this one at the greater side will come both sides there. This one will also be here, 788,940. And if you say this one minus this one minus this one minus this one, you get the balance here, which is 351,640. And this figure is supposed to go to the branch profit or loss. Is supposed to go to the branch profit or loss. So this is where we are posting it to. This is the profit or loss account. So this is what we have. So we can go back now and try to balance them from the first account, that's 3.1. Then we go down to see what we have there. So we are now starting to balance the head office account. So we come again, we do the same procedure. We add the total of the debit to put it aside. We add the total of the credit to put it aside. So if you do that, you'd see that then you compare which total is greater. And the total that is greater will come in between the double lines on both sides, and then the difference between the two totals will come on the side with the smaller total as the balance CD. So this is what we have. If you add the totals, you see that the credit side is the greater side. Is the greater side with the greater total. So we are going to put it on the credit side. So we can just put our double lines there. We can just put our double lines here. Double lines. And the total of the credit is greater, which is 395,200. 395,200. And it's going to come again here. And if we say this one minus this one minus this one, you get your balance CD. And your balance CD there, you get 168,500. And that same balance is going to come here as the balance BD. Is the same figure, which is 168,500. So this is what we have in terms of the head office account. So we can also go to the next account and see what we have in terms of balancing it. So we are now on branch bank account, but on the branch bank account, there's an omission that is there that we need to check on the question. We can go back there on the question. So you have to cross check if you posted everything. We have cash purchases here, 170,000, which is in the code. Remember, when cash stores 520, we debited the branch bank account as we received demand. Here on cash purchases again, we are now paying, so we are supposed to credit at the branch bank account with 170,000. So we go there and put that one. So here we are saying purchases. So it's affecting the branch bank and purchase account. Purchases 170,000. But the one that's supposed to be debited now is the purchase account, but you do not have it on the required part. So this is what we have. Then we can put our double lines. Right. So if you add the total of the credit and the debit, you will see that the total of the debit is the greater total with 765,000. It has to come on both sides. And obviously, and now the difference between the two now will be on the credit side is our balance CD. And so we say the total of the debt of the credit, sorry, of the debit is 765,000. You subtract the total of the credit, you get your difference here, which is 358,700. And obviously, this side now we have got our balance BD. And the same figure there, which is 358,700. So this is what we have in terms of our branch bank account, in terms of balancing it. Then we can move on to check the next one. So from head office, we have got some omissions again that are there that we need to take care of. So on inventory from head office again, we've got some omissions that we need to enter again. So remember, we had some inventory that were transferred from the head office to the branch. So when they're going to the branch, we are supposed to again post them here in the inventory from head office account. So we can just go there and check that figure that we are supposed to put in the inventory from branch account. So we have this figure that we have 200,000 inventory supplied to branch from head office. So the inventory that was supplied to branch, we are supposed also to post it in the inventory from head office account. So we are going to the debit side of the inventory from head office, and then we enter on the debit side 200,000. So we can just go there and enter that one. So here we are here. So we are saying here we have got our head office, the inventory that came from head office, and it's 200,000. And also we have so the balance that will be there now, the balance that will be there is supposed to be transferred to the trading account. So the whatever answer that we are supposed to get there is supposed to be equal to that amount that is on the debit side of the trading account that we got there by subtracting 200 minus 16,700. So we still remember we subtracted the two. So this balance should be on the credit because the debit is greater than the credit. So the balance should be here. So in this account, there's no balance CD, there's no balance BT. Whatever balance will be there will be transferred to the trading account. So here, that's where we've got the smaller side. So that's where we are going to have our trading account balance there. So if you subtract 200,000 minus 6,700, you get 183,300. So no balance BD, no balance CD. And then we can now put our double lines to just close it. So we are going to have a 200,000 here. This one is the bigger side. Will come both sides, and this one also not bigger side as such, but the debit side and the credit side has got the same total, which is 200,000. So this is what we have on 3.3. Then we can move on to the next one. We are now on 3.4. We are now on 3.4. On 3.4, we have the trading account which we balance. That's the first account that we balance, so we're not going to be concerned about it. So we are saying 3.4 is the trading account, which is the account that we balanced at the beginning there, the first account that we balanced. So we can move on to the last one, which is the Impangen branch account. So this is the information that we have. And but if you look at this information, we omitted the balance at the beginning, which is the balance BT. We go back to the question to check that amount. Go back to the question to check what we have at for that balance. Right, we go back there and try to see what we have for that balance. So we have got this balance of 36,000. This 36,000. We were also supposed to indicate it in the Impangen branch account as the opening balance of 36,000. This one, which is head office 36,000. So we expect that this opening balance in the head office is the same balance that we are going to start with in the Impagen branch account. So we are going to indicate it as our balance BD there in the branch account. So if you come here, we are supposed to have our balance BD here. Balance BD, which is 36,000. So this is what we have. So it will be on the credit side of the if you look at in the head office account, it was on the credit side, but when we are now in the branch, it will be on the opposite side, on the debit side. So this is what we have there. And then we can now balance our account, put our double lines, and then we add the total of the debit and the total of the credit, and the bigger total obviously will come between the double lines, and you see that the bigger total is on the debit side. So it's 395,200, and it's going to be the same total that is going to come on the credit side again. And then we subtract now the total of the credit. Basically, we can say this one minus this one minus this one, and then the balance that you are going to get there is 168,500, and this is going to be your balance CD. And obviously, your balance BD will come here is 168,500, and then you can just indicate that this is our balance BD, which is this one 168,500. So this is what we have, guys, in terms of question 3 of that question paper. Let's stay tuned for more videos as we prepare for our final exams. We are still coming. Those who haven't subscribed, please subscribe and share. For this video, I'm signing out.